Welcome back to Price Action Trading Series from Market Secrets. This is episode 34 of the series, and in this episode, we are going to learn about multiple time frame analysis. I'm sure most of you are waiting and even excited to learn about it. Before we head into the session, I have one request for you. In addition to the price action trading series, we are running multiple other series on algo trading, trading strategies, investment strategies, and taxation. If you are interested in any of it, do check it out in our website, which is www.marketsecrets.in. And in addition to that, we have multiple data feeds as well. And if you are a trader, you will find it really handy. So do give it a try and let us know if you have any queries or inputs. So with that note, let's head into the today's session, which is on multiple time frame analysis. So let's imagine a juggler using two identical balls. At some point, the two balls will be at exactly the same height, with one going up and the other one coming down. The gravity forces are playing out here. Both are moving under the momentum of exterior forces. The same could even be true for 4, 6, or any number of the balls. At the same point in time, several variations of the momentum could be in play. So if you're just taking two balls and if you're juggling, at some point these two balls should be in the exact same height, right? But one might be going up and other might be coming down. So if you take multiple balls, the same could be true as well. So one will be in one flow, other one will be in a different flow. So now compare it with the stock. In terms of an absolute price, what is the difference between a stock that is rising and a stock that is falling? If you believe that the true value of the asset is much higher than the current price, then how does the recent history and current momentum of the price affect your decision to buy or sell? The answer to this depends upon your personality, the type of trader you are, and your psychology towards the market. Is the glass currently half empty or half full? Everyone answers it differently. Like two balls in the air simultaneously, currently at the same height, the true picture will only become clearer with more explanation. Now imagine these two lines doesn't exist. So what you would see? You would see just two balls. You will never know which one is going up and which one is going down, right? So all you will see is like there are two balls which are at the exact same levels. Just like these two balls which are in air simultaneously, currently at the same height, true picture will only become clearer with more information when it comes to the stocks which are going up and going down. So unless you are looking at it in a different way by using more data to assess if the ball is in the process of going up or whether it is in the process of going down, that is whether it is ascending or whether it is descending, in which direction are these balls going, up, down, you won't get the answer. You need lot more data to assess and understand it. So likewise, when it comes to your style of investing, would you buy a stock A which is rising or a stock B which is falling? But both are trading at 100 rupees right now. So this is the stock A, which is currently at 100 rupees, but it is rising. And this is stock B, which is currently at 100 rupees, but it is falling. So which one would you buy? Well, before you answer that question, here are some of the rules that you should remember before making that decision. Nope, you won't get to see any other additional details in the chart. It is irrelevant. You will just to be given this particular information. And actually, there is no right answer to this question. Your choice simply reflects your trading style. Everything is considered to be equal fundamentally, except for the recent momentum. So everything about these two stocks are considered fundamentally equal, except for the current price action. And both the stocks are considered to be fundamentally undervalued at 100. And neither stock has any tangible reason for the recent price action. So those are all the conditions. So with this information, let's look at the chart now. The stock A is more expensive than you could have bought it earlier as it is rising. It could be seen as a rolling wagon to jump on board. Stock B is cheaper as it is falling and it is now a bargain. This often looks good, but the momentum traders see it as a falling knife. Consider both the stocks are currently trading at 100. Would you buy stock A and would you sell stock B or vice versa? The answer is we need more information. We need multiple time frame analysis. This is where multiple time frame analysis will come into picture. Most technical analysts, whether they are novices or seasoned pros, have come across the concept of multiple time frame analysis in their career. However, multiple time frame analysis is often the first level of analysis to be forgotten when a trader pursues an edge over the market. Multiple time frame analysis involves monitoring the same instrument across different time frames. While there is no real limit as to how many time frames can be monitored or which ones to choose, there are general guidelines that we should follow as a trader. Using three different time frames give us a broader view of any market. Using fewer than this can result in considerable loss of data, while using more than three time frames typically provides redundant analysis and indecision. When choosing the three time frames, a simple method can be followed using the rule of 4. This means that the shorter time frame should be determined first. So pick the time frame you want to trade first. Say you selected 15 minutes time frame as your entry time frame or the short time frame. Then a medium time frame should be chosen and it should represent a standard as to how long the average trade is held. It should at least be 4 times the shorter time frame. In this case, if we select 15 minutes as a shorter time frame, 4 time of it would be a Harley chart. So 1 hour or Harley time frame should be used for medium or intermediate time frame. Through the same calculation, the longer time frame should be arrived at. It should be at least 4 times greater than the medium one. So keeping with the previous example, the 4-hour chart should be the third time frame. So this is how we should get started with the multiple time frame analysis. So it's time to dive into the multiple time frame analysis, and deciding the 3 time frames to analyze is the first step. So go ahead and decide on your time frame, because everyone will have different preferences. So based on your trading style, choose the time frames wisely. And with that note, we have reached the end of the session. If you have any queries, comments, or feedback about this episode, please leave it down in the comment section. We'll be happy to answer it. Also, hit the like button if you have liked this video and share it with your friends if you find it useful. Also, your comments and feedbacks is important for us, so please do drop a comment, whether it is a positive one or a negative one. Also, subscribe to our YouTube channel and click the bell icon to get notified whenever we upload a new video or conduct a live session. Thanks for watching. Have a great day. Goodbye.